The collapse of Silicon Valley Bank has created a crisis of confidence for whole financial sector and especially regional banks. There are two variables involved in this situation. The first one is that of depositors who put their money in the bank, which has further used the bank to invest in different fixed income products, including loans to public and government. Now, if depositors become unsure about the safety of their money held by the bank, they can start withdrawing money in large amounts. In most of the cases, bank will not be able to provide so much money in such a small time. This will ultimately result in regulators coming in to close the bank. Anything left in bank's assets will be given to insured depositors and then further to uninsured depositors. Now, here comes the second variable, which is that of investors. They are the people of who own the stocks of that bank. Once things go wrong, stock prices can witness sharp fall and investors can even lose all their money in case of bank's closure. In the same backdrop, we saw a sharp fall in prices of all lending stocks including SoFi Technologies and Upstart Holdings. SoFi received its banking charter earlier in 2022. Now, SoFi is a bank. According to last report, SoFi has deposits of $7.2 billion in loans held for sale worth $13.5 billion. The company also has cash of $1.4 billion. We believe this amount is sufficient to honor the commitments to depositors, and there is little material risk involved with this situation. Still, negative effects of overall sector cannot be ruled out. SoFi stock price declined by 17% in the last week, and based on price chart and overall negativity surrounding the financial sector, it looks the stock will touch its January lows around $4.50 in the coming weeks. Hence, caution is advised for now. Upstart Holdings, on the other hand, is operating in a funding-constrained environment, which is the primary cause of revenue shortfall. Management is proactively taking actions to address it. The company's goal is to operate as a marketplace for credit over the long run. Lending is a category which would expect to experience some volatility over time due to macroeconomic factors. In the last few quarters, lenders and institutional credit investors reacted more quickly and abruptly than the management anticipated. Several of them have paused or reduced originations due to fears about the future of U.S. economy. Upstart balance sheet is less convincing than SoFi, and the revenue is consistently falling. The current situation warrants offloading stock to buy back cheaper. The stock is expected to break lows of $13 in the coming weeks. In the next 2 weeks, we have two important events to look for. The first one is Consumer Price Index, commonly known as monthly inflation report, due on Tuesday morning before the market opens. Market analysts are expecting a year-over-year reading of 6%, whereas the Cleveland Fed inflation nowcast is showing a reading of 6.2%. Anything below 6% can bring positive reaction from the market, and we may see some recovery from the current drop. Anything above expectations can further deteriorate market sentiment, and Nasdaq can break 11,000 level. However, the inflation report may not change the situation as much as Fed meeting on March 22, where it is expected that a further 25 to 50-point hike in rates will be announced. Economic conditions are tightening, and next 6 months will show us how much the economy gets hurt by Fed war against inflation. For the time being, the best strategy is to start selling in small chunks above 12,000 level. For buying, we will not be entering fresh positions unless Nasdaq drops below 10,500. Among the biggest losers of the week was Signature Bank. In last few weeks, its stock price has dropped 50% from $150 to $70. The bank has $88.5 billion worth of deposits and around $73.8 billion worth of loans. As of now, the balance sheet looks pretty safe. The unrealized losses figure of $2 billion is also not huge. However, a run of depositors withdrawing their money can cause trouble, which can put further pressure on the stock price. The prospect of losing all your money is compelling some investors to sell their holdings in panic. As of now, we would advise to avoid these stocks till there is some clarity from Federal Reserve about what measure they are going to take to protect depositor confidence.